Welcome to Kriegel & Company CPA, an accounting and tax practice servicing small businesses and their owners. My name is Scott Kriegel, and I'm the founder of Kriegel & Company. On a regular basis, we find ourselves consulting with entrepreneurs and aspiring small business owners on the type of business entity to form. While there may be specific legal reasons for a particular business type, we're going to focus on the tax-related pros and cons as it relates to the four primary business forms. Those four business types are sole proprietorship, C corporation, the S corporation, and the limited liability company or partnership. The sole proprietorship. This is the simplest entity type to form. It is an unincorporated business operation. There is little to no cost to start a sole proprietorship, and you can begin operating today. Unfortunately, the sole proprietorship is one of the more expensive tax forms to operate under. The net earnings from your business are subject to federal, state, and local income taxes, which could range anywhere from 15 to 45% depending on your home state. In addition, those same net earnings are subject to a 15% self-employment tax. Now, the C corporation is a business form that is rarely used for small businesses. However, it may be necessary in the case of a possible foreign shareholder or where you need specific rights or privileges on particular ownership shares. Again, the C corporation is an expensive type from a tax perspective because there's a double layer of taxation. The net earnings from the business are subject to a corporate income tax, and when the profits are distributed to shareholders, there's an additional income tax imposed at the individual tax level. Now, the S corporation is the business type that we really like for small businesses. It provides the separate legal liability protection of a corporation and has only a single layer of tax. The net earnings of the S corporation are not subject to any self-employment taxes. Now, keep in mind with the S corporation, there is a limit on the number of owners in the S corp, and that is 75 shareholders. This is rarely a case for most small businesses, but you do need to keep that in mind. There is also an obligation for profit distributions to be made on a pro rata basis based upon the ownership percentage. Finally, the limited liability company. This is certainly the most flexible of business forms because you can choose how you want to be taxed on the business profits. It also provides that separate legal liability protection of a corporation. However, the LLC form does have some unintended tax consequences because of the default classifications of how those entities are taxed. A single-member LLC is taxed as a sole proprietorship. A multi-member LLC is taxed as a partnership. Both business forms impose tax on the net earnings for income tax purposes as well as self-employment tax purposes. As you can see, there are many considerations that go into choosing the right business entity type for your new operation. We can help you sort through the issues involved and make sure that you're choosing the most tax advantageous business type. As a small business owner myself, we understand the significance of this important step in your new business operation. Let us know how we can help you.